Hey all, welcome to ShareTreck. This is Raj here. Friends, I want to talk to you about Illumina today. Let's get started. Welcome back. First, I would like to talk about what I gather from the CEO speech. And remember, I'm looking at Grail closely and also looking at what Illumina's forward guidance is. So, here is what I gather from the CEO speech. Illumina is committed to collaborate with customers globally, aiming to drive innovation in the field. And this collaborative approach is evident as the customers leverage on Illumina's NovaSec X platform to scale up projects across various domains of genomics research. Specifically, it is said that they are focusing on areas like minimal residual disease, multiomics, epigenomics, and biomarkers, and methylation for disease diagnosis and characterization. Now, the NovaSec X platform's advanced capabilities have been enabling researchers to dwell deeper into these aspects of genomics, facilitating groundbreaking discoveries and advancement in understanding diseases. Illumina's strategic acquisition of Partech, a specialized multi-omics software solution, further underscores its dedication to enhancing its offerings in this space. And by integrating Partech's expertise into its portfolio, Illumina aims to empower researchers with powerful tools and resources to analyze complex genomic data more effectively. And through these initiatives, Illumina not only strengthens its position as a leader in genomics technology, but also fosters a collaborative ecosystem that drives innovation and pushes the boundaries of what is possible in genomics research by partnering closely with its customers. And Illumina is still at the forefront of revolutionizing healthcare and personalized medicine, ultimately contributing to improved diagnostics and treatment for various diseases, and continues to be committed to keeping its systems open sourced. Now, if we were to look at the financial side of it, the revenue was around US dollar 1.08 billion, which is down 1% from the first quarter 2023 revenue. And if you look at the net loss, which was reported at US dollar 126 million, it is down from 3 million profit in quarter 1 2023. So when we compare from first quarter to first quarter, I think the performance has not been good. And if you look at the losses, US dollar 0.79 is the loss per share, which is down from US dollar 0.019 profit in the first quarter of 2021. So having said that, quarter to quarter performance has deteriorated in all counts. However, I have to add that revenue and EPS exceeded street expectations. So in other words, there was an expectation from the street, which was for Illumina to perform worse than it reported. So in a way, it's a good news. But at the same time, I would like to share with you something that I saw in the earnings report that really made me a bit concerned. And I think I expect Q2 may be worse. This is because Illumina has said in its earnings report that the core Illumina non-GAAP operating expenses were lower than expected due to timing of project spend shifting from Q1 into Q2 and lower stock-based compensation expense due to one-time reversals. So putting it all together, core Illumina non-GAAP operating margin was 20.6% in Q1 2024 compared to 17.4% in Q1 2023. So there's a, I think, 2.6 basis points increase in operating margin. This basically is due to expenses shifted from Q1 into Q2, which means that these expenses are going to drag down the operating margin in Q2. That's the way I understand it. I might be mistaken, but that's how I read it. And there was no detail around disposal of Grail. There was just a mention that potential disposal of Grail is going to happen. And that was a big disappointment for me. However, based on the data that has been provided, it appears that Grail's expenses did increase, and Grail's non-GAAP operating expenses totaled 197 million, which represents a $24 million increase year over year. This increase was driven primarily by higher headcount to support commercial expansion and as well as R&D efforts. I think this is significant because on divestment, Illumina has to provide 2 years worth of funding to ensure that Grail can follow through on its business plans. That's what the EU has said, if I'm not mistaken. So greater the expenses for Grail, greater the money Illumina will have to set aside for Grail. And the strength of the US dollar and the weakness of the China market are providing headwinds according to the management, and therefore I think this stock can bounce back even if one of these two factors were to resolve. What concerns me is the backloading of operational costs. I will cautiously watch the Q2 earnings, and I'm hoping that as the Fed cuts will do the trick somewhere around June, Q2 may not look as bad. And in conclusion, my personal opinion is that among companies in this segment, Illumina will survive and thrive in the long run. I will stay away from this sector until we see rate cuts. And I have a logic for this. And this is because many research projects may freeze spending, which will translate to lower consumable spending. While cash-strapped genomic companies may reduce staff and slow down their research, this could lead to delay in procuring equipment. Some startups could cease to exist. And once the shakeout is complete and the rate cuts start, we can see a pickup in the underlying market, and that in turn will lead to a boost for Illumina. So please let me know what you think, and I think that's all for now from me. I'm looking forward to hear your comments. Bye for now.